As of this moment, Spruce Biosciences, trading under the ticker SPRB, is experiencing a truly staggering intraday session. The stock is currently priced at $130.40, representing a colossal gain of $121.58, which translates to a mind-bending 1,378.46% surge today alone. Volumes are exploding, and the trading range has been immense, stretching from a low of $30.03 to a high of $170. This isn't just a rally, it's a complete repricing of a company that just yesterday was trading in the single digits. Now, for anyone watching this unfold, the immediate assumption is that this must be a meme stock frenzy or some sort of short squeeze of epic proportions. And while those elements might be playing a small part in the volatility, the reality of what's driving this move is far more substantial and, frankly, more exciting from a biopharmaceutical standpoint. The expectation is that this is retail-driven mania, but the reality is that the U.S. Food and Drug Administration just handed Spruce a designation that fundamentally alters its entire trajectory. The FDA has granted Breakthrough Therapy Designation for its drug tralesinidase alfa, a potential treatment for a rare and devastating neurological disorder called Sanfilippo Syndrome Type B. This isn't just another press release. This is one of the most significant regulatory validations a development-stage biotech company can receive. It signals that the FDA believes, based on preliminary clinical evidence, that this drug could represent a substantial improvement over any available therapy. For a company like Spruce, which has faced significant headwinds and a near-total collapse in investor confidence over the past year, this is nothing short of a Lazarus moment. Let's ground ourselves in the common belief about Spruce Biosciences before this news broke. The market had largely written this company off. The prevailing narrative was centered on its previous lead candidate, tildacerfont, for congenital adrenal hyperplasia, CAH. That program hit a major wall. In March 2024, the CAH-MELIA 203 study failed to meet its primary endpoint. The market's reaction was brutal and swift. Confidence evaporated, the stock price collapsed, and the company was even delisted from the NASDAQ for a period. Investors, especially those who had been following the tildacerfont story, saw a company with a failed asset and a bleak future. Many who were still holding were likely doing so at a significant loss, hoping for any scrap of good news. The expectation was, at best, a slow fade into obscurity or a potential buyout for pennies on the dollar. Platforms like Robinhood and SoFi Invest, popular for self-investing, likely saw a mass exodus from the stock as retail investors cut their losses. But here is where we challenge that narrative and reveal the deeper reality that the market is now scrambling to price in. While everyone was fixated on the failure of tildacerfont for CAH, Spruce's management team was executing a critical strategic pivot. In April of 2025, they acquired tralesinidase alfa from another company, shifting their focus entirely to this new asset for Sanfilippo syndrome. This wasn't a minor portfolio addition, it was a bet-the-company move. And now, that bet appears to be paying off in a spectacular fashion. The Breakthrough Therapy Designation is not merely a procedural step. It comes with intensive FDA guidance, the potential for a rolling review of their Biologics License Application, BLA, and priority review status. This can shave years off the typical drug approval timeline. Crucially, the FDA also confirmed that a specific surrogate biomarker, a measurable substance in the body that indicates the effect of a treatment, could be used as the basis for an accelerated approval. For a fatal pediatric disease with no approved treatments, this is a massive green light from regulators, suggesting a clear and expedited path to market if the data holds up. The daily trading action we are witnessing is a direct reflection of this fundamental reevaluation. The massive surge in volume indicates that institutional investors, not just retail traders on their Fidelity mobile app or Interactive Brokers trading platform, are now piling in. They are looking at the potential market for a first-in-class treatment for a rare disease, which often commands premium pricing. And they are seeing a company whose market capitalization was absurdly low just 24 hours ago. The price is not just moving on hype, it's moving on a revised calculation of future cash flows, probability of approval, and the total addressable market for tralesinidase alfa. This is a classic case of reality far exceeding the market's pessimistic expectations. The stock had been so beaten down that this positive development is creating a slingshot effect. Many retail investors engaged in online investing through platforms like Schwab Intelligent Portfolios or Fidelity Brokerage might have missed this pivot entirely, still associating Spruce with its past failures. So what exactly does Spruce Biosciences do now? The company is a late-stage biopharmaceutical firm. Its primary focus, following the recent acquisition, is on developing therapies for rare neurological disorders. The star of the show is tralesinidase alfa, an enzyme replacement therapy for Sanfilippo Syndrome Type B. This is a horrific genetic disorder that primarily affects children, causing progressive and severe neurodegeneration. There are currently no approved disease-modifying therapies. Spruce's therapy aims to replace the deficient enzyme at the root of the disease, potentially halting or slowing the devastating neurological decline. Before this pivot, the company's entire identity was wrapped up in tildacerfon for CA and other endocrine disorders. The failure of the Camellia 203 study was a significant blow, as it was their most advanced program. That failure led to a corporate restructuring, a significant reduction in workforce, and a reverse stock split just to regain compliance with NASDAQ's minimum bid price requirements. The company was in survival mode. But the acquisition of tralesinidase alfa, and now this FDA designation, has completely rewritten their story from one of failure to one of potential triumph in a field with enormous unmet medical need. This is a critical piece of information for anyone considering an investment in individual brokerage accounts. The company's past performance is no longer the primary indicator of its future potential. Looking forward, the outlook for Spruce Biosciences has been transformed overnight, but it is not without its own set of risks and opportunities. The most significant catalyst on the horizon is the planned submission of the biologics license application for tralesinidase alfa in the first quarter of 2026. Given the Breakthrough Therapy Designation and the potential for accelerated approval, a positive FDA decision could come much sooner than it would for a standard drug application. This provides a clear medium-term milestone for investors to watch. The opportunity is immense. A first-to-market therapy for a fatal rare disease could generate hundreds of millions in revenue, even with a small patient population, due to the high prices these novel treatments often command. The company also holds orphan drug and rare pediatric designations, which provide further market exclusivity and financial incentives. An interesting side note is that Spruce hasn't completely abandoned tildacerfon. They have partnered with another company to study it in a specific subset of major depressive disorder, with the partner bearing the cost of the trial. While a long shot, any positive data from that study could add unexpected value back to an asset the market has valued at zero. However, the risks remain substantial. This is still a clinical-stage biotech company with no revenue from product sales. The entire valuation is currently pinned on a single asset. Any unexpected safety signals, manufacturing issues, or a negative FDA decision would be catastrophic for the stock price. The surge we are seeing is pricing in a very high probability of success, which may or may not be warranted. Furthermore, the company will likely need to raise additional capital to fund the commercial launch of tralesinidase alfa should it be approved. This could lead to dilution for current shareholders. While platforms like Fidelity and E-Trade offer sophisticated tools for self-investing, investors need to understand the binary nature of this kind of investment. The path forward for Spruce is no longer a slow decline, but a high-stakes bet on clinical and regulatory success. Comment below with your thoughts. Do you believe this FDA designation is enough to carry Spruce to a successful drug launch, or is the market getting ahead of itself? In summary, the dramatic ascent of Spruce Biosciences stock is a powerful lesson in the tension between market perception and fundamental reality. The prevailing expectation was that of a failed company, defined by the setback of its initial lead drug candidate. The stock was left for dead. The reality, however, was a company undergoing a profound strategic transformation, culminating in a major regulatory win that opens a direct and accelerated path to market for a potentially life-saving therapy in an area of desperate need. The market is now violently correcting its previous outdated assessment. The story of Spruce is no longer about the failure of tildacerfont. It is about the immense promise of tralesinidase alfa. While significant hurdles remain on the path to commercialization, the dynamic has irrevocably shifted. The company has moved from a position of weakness and uncertainty to one of strength and clear purpose, providing a